Hello everyone, this is Haralambos Pissouros, Senior Technical Analyst here at IronFX Global, bringing you the technical updates for February 19th. Today let's see the technical outlooks of Euro and Dollar and Sterling Dollar. Euro and Dollar rebounded after the release of the FOMC meeting minutes, while GBP USD surged on the strong UK employment data. So let's begin our assessment with Euro Dollar. Euro USD rebounded from slightly above the 113.15 support level after the minutes of the latest FOMC meeting showed that the committee is willing to maintain interest rates near zero for longer, in contrast with market expectations of an earlier hike due to an improving labor market. Nevertheless, the up move was halted slightly below the resistance line of 114.50. Moreover, the pair is still trading in a sideways mode between the key support of 112.60 and the resistance of 115.40. Therefore, I would keep my view that the near-term bias is still neutral. As far as the broader trend is concerned, I believe that the pair is still in a downtrend. Euro-dollar is printing lower peaks and lower troughs below both the 50 and the 200-day moving averages. However, a clear dip below 112.60 is the move that would shift the bias back to the downside, I believe. Such a break could probably pull the trigger for another test at 111, a support level defined by the low of the 26th of January. Now let's move on to cable. This currency pair surged on Wednesday after the UK employment rate declined while wages accelerated in December. After hitting support near 153.50, the pair shot up, breaking above the resistance, now turned into support of 154.35. I still expect the bulls to challenge the psychological obstacle of 155. But given the negative divergence between both our short-term oscillators and the price action, and also that the rate is trading within a possible rising wedge formation, I would be careful of a possible down move as soon as the rate challenges the 155 psychological territory. As for the broader trend, as long as cable is trading below the 80-day exponential moving average, I would consider the overall downtrend to be intact, and I would see the recent advance as a corrective phase, at least for now. It is worth noting that currently the 80-day EMA coincides with the 155 psychological figure, and as a result, only a clear close above that zone could have larger bullish implications and make me argue for a possible trend reversal. So that's it for today. For more analysis and charts, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Haralambos Pissouros, Senior Technical Analyst at IronFX Global, wishing you solid trading.